for NVIDIA. So we need to talk about the chips. And then you have Apple approaching a new high yet again as its price target gets bumped up to $400. That's over at Citi. That's a new street high, and it's your biggest position by far.
Yeah, so I'm delighted about that, Scott. I know virtually everybody on the desk here and virtually all of the people watching have some piece of Apple. I have a very big piece because I'm such a believer in the company, Scott. And so I heartily endorse the upgrade here. As far as that NVIDIA trade, Scott, I don't really quite understand that as well, but I am not in NVIDIA myself, and that's really just driven, Scott, by that unusual activity. If I would have seen it, I'd be in there. I really haven't seen accumulations in that name, and given the run that it's had, I've kind of, backed off from there a little bit. But Steph nailed it. It's this retail number today at 17+% just proves that if you open, they will come. This was a question Tillman Fertitta asked. Many folks have asked. And it's one of the seminal issues as far as seeing a sustained recovery. Will consumers feel comfortable spending? Will they go out and spend, and will they go out in public? Will they go into theaters and all the rest? That remains to be seen, Scott, because many of those are still locked down. But will spending return? And the answer is yes. That's a very solid endorsement of where the economy can be going forward. And I think we're all probably both relieved and heartened to see that. Yeah.
Bryn, you've quite literally been buying the recovery, right? We highlighted the names that you had as recent buys, and they, most, if not all, play right into the story, whether it's Southwest Airlines or Citi or Raytheon, Ralph Lauren, Six Flags, Las Vegas Sands, Starbucks, et cetera, all played because of what you were hoping to find in a good retail number. As I said off the top, you had that good news today on the potential virus treatment as well to factor in.
Well, I mean, I think just like on the heels of, Jay Powell's testimony, in 1970, Marty Zweig, who was an amazing investor, very good market forecaster, he said, don't fight the Fed. And 50 years later, I wouldn't fight the Fed. And I think that you're seeing those continued, Jay Powell is telling all of us he is going to continue to backstop this economy. Couple that with fiscal policy, that we're going to continue to get more. Trump talked about a potential $1 trillion infrastructure. And then I think as we reopen, people want to get out. The numbers people are going to spend. And so I think you want to own some of these names inside of your portfolio. I mean, in my portfolio, I sold calls against these because in names like Citi and Southwest Airlines, from a premium standpoint, we were getting 10 and 7%, which are huge call premiums because, once again, there's a lot of volatility out there. But today, these names have continued to do well. And, I love Apple, but I think right now you can still get some outsized returns in these recovery names or epicenter stocks.
Yeah. Kate Moore, so what's the best place to be? Where is the best place to be right now? Look, just a couple of days ago, we were having a conversation about whether this market was poised to correct even further. You had virus numbers ticking higher, which in some places they are spiking and they are certainly worrisome. And all of a sudden, in the last couple of days now, maybe, starting, at a point yesterday, you had, as I said at the top, the bulls grabbing this market, wrestling it back. And is the trend now back up?
Well, look, there is no bad news in the market right now, and the good news has become great news and really been extrapolated forward. So we are constructive, I want to say, but I do want to point out something that's really important is there's a massive bifurcation going on both in the market and the economy. In the economy, we see some of these companies and retailers and consumer-oriented stocks do well. Obviously, the retail sales data today was very comforting for all of us. At the same time, small and medium-sized businesses are not recovering. In fact, many of them have closed down and have had funding problems, even with Fed and policy support. So, I mean, we are seeing a bit of a division in the economy, but that's not getting represented, of course, in the equity market. And then within the equity market, you still have some real leadership from the haves, those companies with great balance sheets and great corporate management teams, and those companies that have the ability to sustain revenue growth even in a more sort of choppy economic time, and then the have-nots, which frankly are largely falling into the value bucket at this point and are a little bit more challenged. Our view at this point is that you want to stay with a lot of the secular winners, that a bunch of the trends and themes that we liked going into the pandemic, frankly, have been supercharged as a result of the activity and the behavioral changes during the pandemic. And that is cloud, it is software, big parts of healthcare, high quality consumer, cybersecurity.